Welcome to Technofunk Domain Capsules. In these capsules, Technofunk provides you with compressed knowledge to learn key business domain concepts. These videos are useful for professionals who want to learn and sharpen their domain knowledge. This video is part of series to learn banking domain. In this video we will explore different types of banks. Learning objectives for this video are: learn about various types of banks like retail banks, commercial banks, cooperative banks, investment banks, specialized banks, central banks. Why we need different types of banks, meaning the focus of banking is varied, the needs diverse and methods different. Thus, we need distinctive kinds of banks to cater to these complexities. Deposit-taking institutions take the form of commercial banks, which accept deposits and make commercial, real estate, and other loans. There are also mutual savings banks, which accept deposits and make mortgage and other types of loans. Another type is credit unions, which are cooperative organizations that issue share certificates and make member consumer and other loans. Retail banks. Retail banks provide basic banking services to individual consumers. Examples include savings banks, savings and loan associations, and recurring and fixed deposits. Products and services include safe deposit boxes, checking and savings accounting, certificates of deposit CDS, mortgages, personal, consumer and car loans. Commercial banks. Commercial banks provide financial services to businesses, including credit and debit cards, bank accounts, deposits and loans, and secured and unsecured loans. Commercial banks in modern capitalist societies act as financial intermediaries, raising funds from depositors and lending the same funds to borrowers. They can be classified as public sector and private sector banks. Public sector banks. Public sector's banks are those in which the government has a major stake and they usually need to emphasize on social objectives than on profitability. Some examples are State Bank of India, central banks of any country. Private sector banks. Private sector banks are owned, managed and controlled by private promoters and they are free to operate as per market forces. Some examples are Citibank, ICICI Bank, IDB Bank. Investment banks. An investment bank is a financial institution that assists individuals, corporations and governments in raising capital by underwriting and/or acting as the client's agent in the issuance of securities. An investment bank may assist companies in mergers and acquisitions, market making, trading of derivatives, fixed income instruments, foreign exchange, commodities, and equity securities. Cooperative banks. Cooperative banks are governed by the provisions of State Cooperative Societies Act and meant essentially for providing cheap credit to their members. They are an important source of rural credit, that is agricultural financing in India. Specialized banks. Specialized banks are foreign exchange banks, industrial banks, development banks, export-import banks catering to specific needs of these unique activities. These banks provide financial aid to industries, heavy turnkey projects and foreign trade. Central banks. Central banks are bankers' banks. They guarantee stable monetary and financial policy from country to country and play an important role in the economy of the country. #ref. Thank you for watching this video. You can download the presentation at www.technofunk.com. Users are free to download the material for their personal use only. Commercial use is strictly prohibited without prior permission from www.technofunk.com. If you need copies of this material for corporate training or commercial use, please contact info@technofunk.com for further details. Please share your feedback by writing to us at info@technofunk.com or visiting www.technofunk.com. Let us understand some key generic fields that are used in almost every